As you know, the IMF cut its growth projection for the global economy to 3.7%. From 3.9 previously. Lots of uncertainty. Let's get perspective from Dr. Lipton. Yesterday, my conversation with Director General Azevedo of the WTO, he said there's no constructive conversation between the U.S. and China. Could there be further implications on the downward projection of global growth because of that?
Well, I hope not. We've been arguing for a long time that there ought to be a de-escalation of trade conflict and there ought to be dialogue. And I think that's still the right path, but parties have to be open not just to dialogue, but to change, which means that where there's a need to modernize the trading system and for countries to address trade practices that really are damaging to other countries that may have not been so when Asia was, say, a much smaller economy in the global economy, but are damaging now. There has to be an openness to dialogue. So far, the impact of trade conflict has been on the global economy has been small, but the risk of sustained conflict with retaliation, with rising uncertainty could be very problematic. So we urge de-escalation and dialogue.
Some are already saying that the global supply chain has been tweaked to cater to perhaps a prolonged U.S.-China trade war. Would that be enough?
Well, I think countries that are affected by tariffs have some recourse. They can look for demand in other places. That's a painful process, and it may be an incomplete process. And you may see some unscrambling of supply chains that would come naturally from that. Of course, a preferred outcome, a more efficient outcome, and a less damaging outcome is to de-escalate conflict and have dialogue.
This is all happening when the dollar is getting stronger, when central banks are normalizing. How do you think, how prepared are emerging markets to cope with all these uncertainties?
Well, we've been asking ourselves this very question of whether we'll see difficulties broadly across the emerging market world or difficulties in those countries that are the most fragile, the most vulnerable. So far, most emerging market economies are making their way through this time period pretty well. And what we're seeing is that the emerging market countries with pre-existing vulnerabilities, the countries that are most affected by the rising dollar interest rates, some of them are under stress, some of them quite extreme stress. A couple of them have come to the IMF for financial support and for us to help them with their adjustment. Time will tell. It's entirely possible that in a very negative global environment, this would sweep up more countries. But it looks right now as though this is a more localized problem than a generalized problem.
So you don't see the possibility of a debt crisis developing, considering that over the last few years, given the ultra-low interest rate environment, countries have been accumulating a lot of debt.
Debt is very high, and some countries are quite vulnerable to interest rate increases, dollar interest rate increases and dollar strengthening because their debts are in dollars and the service becomes more expensive. So there are clearly some countries are having and some countries will have difficulties. Whether that becomes a more generalized problem, we'll have to see. As I say, I wouldn't rule it out, but right now it doesn't look to be the case.
The conversation here at the IMF World Bank meeting has also revolved around what Trump has been saying. He's saying that perhaps the Fed... President Trump. Apologies, President Trump has been saying that the Fed could be moving too fast.
Central banks do best when they are independent and try to fulfill their mandates. In the case of the Federal Reserve, they have a dual mandate of price stability and supporting maximum employment, and I think they ought to continue to follow that. I think they've done a good job so far. It is certainly, from time to time, central bank actions are controversial and displease some portions of the economic population, whether it's firms or individuals. What's key is that they do their job and fulfill their mandates.
emerging market economies like Indonesia have come out to say that the Fed needs to be more mindful of the repercussions of those rate increases.
That's a tricky question. I think the Fed in the last 3 years has been more and more mindful. I think they study quite carefully how their policies may spill over and affect other countries. But in the end of the day, it's also extremely important that they do their jobs, because after all, you wouldn't want the U.S. economy to have either runaway inflation or another recession. Either one of those outcomes would have huge negative repercussions around the world. So the Fed has to do its job and fulfill its mandate.
But having said that, could there be better policy coordination?
I think that it's one of the reasons for the meetings that we're having here is for the international financial community to have discussion, to express concerns, to think about how there's interconnectedness and how the actions of some may affect others, to think about what is the best way to, if you can anticipate better what the Fed is doing and down the road what the ECB will do, can you better take care of yourself because you're ready to take steps to best manage your own situation. So I think in that sense, cooperation and coordination is very valuable, and that's what these meetings are all about.
Dr. Lipton, just one final question. What is the biggest risk of the global economy? Would that be a rising dollar? Would that be the U.S.-China trade war?
Look, to me, we also, as we sit here in Bali, need to look over the horizon at the next recession, the next downturn. Surely there will be one. In the United States, this is the second longest expansion in United States history. We don't know when. I wish we did. But the question is, how prepared will we be? Will we have the policy space, monetary policy space, fiscal policy space, the ability to deal with financial sector problems, the ability to coordinate across countries, to have a strong enough IMF that can help countries by convening discussion or, when need be, providing finance in order to make sure that the next recession or crisis is manageable?
Dr. David Lipton, thank you so much for your insights today. And of course, Tom, we're coming to you live from the IMF World Bank meeting here in Bali.